Hello, this is Steve Malone with Compass FX. I hope you're doing well today and you're getting some good trades. I want to continue on the topic of keeping your trading simple. Again, too many of us get wrapped up in complex trading strategies when oftentimes some of the basic ways of trading can definitely yield some pips for us. I want to continue also on the topic of trading away from the weekly open. I've received some questions about trading away from the open, and I want to give a quick review and show you how the market's working. One of the questions has been, what do you do when the market crosses back over a trend line opposite of where it started at the beginning of the week? In that case, sometimes the market will play back towards the weekly open. Again, what we're looking for in this technique is to trade away from the weekly open and looking to see if the market's going to follow a trend line based upon higher lows or lower highs. So let's take a look at the euro dollar, go back over this and answer some of the questions along the way that I've received. This is the euro dollar. And to show the whole week thus far, I've kind of reduced the size of the candles so you can see from the start of the week and show you that when the week got started here, it did give me a bit of a lower high, and I'll wait for that to develop. I wait for the market to make its move and then find that lower high or that higher low that tests the weekly open and creates a trend line. So in this case, the market comes back, tests the weekly open, and gives me a lower high and starts to roll back over. There's my trend line, these 2 points. And then we look to trade away. So at this point, I'm into the trade somewhere around the 33.80 area. You can see right about in that area, I'm into the trade. And then I'm looking to trade to the next weekly range. The market goes to that weekly range and continues, then I follow the trade to the next weekly range. If the trade continues, I follow it to the next weekly range. And then I follow using a trailing stop or your staggered stop loss as it makes a move. I do recommend proper money management, and part of that is to consider possibly taking some positions off, or if you'd like, add to positions as the market continues to move in your favor. Now, one way to know if the market's moving in your favor is to look for additional trend lines that are even stronger in the direction of the trade. So in this case, as the market was moving down and continued moving down, it eventually gave us another lower high. So at this point, I go from that last high point up there to this one, and you can see that the trend downward is getting even stronger when the slope of the next trend line is even at a greater angle down. Now, the question I've got today is, well, what do you do when the market crosses back over? Well, again, I'm not trading back towards the open. I'm looking for the market to go back, test a trend line, bounce off that trend line, and go back in the direction. Sometimes it happens, sometimes it doesn't. And you can see here that in this case, it gave me another higher low right there, so I can draw another trend line. Now, this is where folks are asking me the question. It crosses back through. What do you do in this case? I don't really do much anything. I'm looking to see if there's going to be a bounce off the trend line and back in the direction of the trend. If not, you let it go. Let it go back to the next trend line. If it's going to bounce off of that and push down, I'll look to make that trade. Sometimes you literally have to wait for the candle to close and to see if the next candle is going to continue in the direction of the trend. Now, another question came up about, well, what if it goes beyond the extension level that you have in the average daily range pro calculator? And that's what's seen here on the chart, is the weekly levels based upon the average daily range pro calculator. I'll talk about that in a moment. All you simply have to do is find the distance between two levels here, and this is right about 25 pips or so. So in effect, what you can do is put on another trend line that's about 25 pips or so, just the same distance. There's 25 pips, and it's interesting how the market will play to that next extension level. So do that. Use that as a technique. So right now with the euro dollar, there's really nothing to do. I'm going to let it either run back up, and there are offers in the market back up around the 33.30, 33.40 area. Maybe the market moves all the way back up there. I'll just wait to see how the market plays from this point. Now let's go take a look over at another currency pair. Here was the dollar CAD I talked about. Now, as I mentioned, as you have in this case higher lows, keep marking trend lines. And you can see here that we have the original trend line that started, then another trend line. And again, I'm not trading back towards the weekly open. The market moved back, tested around, then finally broke and was moving away from the weekly open. And it created another stronger upward trend line when it made this higher low. And you can see that we have a stronger trend to the upside. Now here's really the interesting thing, is when it came back and bounced off, that gave me another opportunity to step in the market, trade away from the open, trade away from the trend line, and look what it pins right up to. Right to that second extension high. Interestingly, also it falls back, comes down and just about closes on a trend line, and then look what it does. It falls back down, and right now we sit basically at the next lower trend line. The market has a tendency to go back to where it's been before. So it only makes sense in this case for trend lines to get tested. And what I'm going to be looking for is simply the market will bounce off this trend line and move back in the direction of the original start of the week. It might do that. It might not. It might drop, and when it drops, then I'll be looking for the market to sink back down towards either this level or this level. Now, if you want to trade the market moving back to the weekly open, that's up to you. This strategy is about trading away from the weekly open and away from the trend lines. Now, another example I want to share with you here is what happens when the market crosses over trend lines. And a case in point, this started making a move up literally from the previous week and started making a nice move up. Again, if you took the trade here, you could simply put your stop loss underneath this level here, and that's only about 27 pips. That might be too far for you, so put it up underneath the previous low if you want. Now the market comes back, and now it's hitting this trend line off these two lows right here. It comes back and hits the trend line. We could be out of the trade. It didn't fulfill its move all the way up to the weekly mid-high. Now, as the market makes a move back towards the weekly open, we're not looking to make this trade. We're not even looking to really trade this short here until we have a new trend line development. So the market kind of comes back, bounces around, and gives me a lower high. Now I've got a new trend line to start working with. Let's see how the market plays off of this trend line. So here we have the setup, and so the market comes off of that, bounces off, bounces off, bounces off, but then finally makes a move down to this level and was a little rocky back and forth. Then the market turns, and now the market really gets going. From this point to this higher low, now I'm looking for what's the market doing as far as moving away. Oftentimes you're going to get boxed in. You can see from the previous week that we were a bit range bound like so. And you can see that continued. It continued from last week into this week for the first couple of days, and then after that kind of settled down, now we finally start getting a movement, and here's what we're looking for. A move away from the weekly open and following the trend line. And look, the market makes a move up, hits a weekly high, comes back, and bounces off the trend line and makes a move to the next weekly range level. And you can see the market kind of bouncing back and forth, comes back down to the trend line, and then bounces again up to the next extension high level. And lastly, I want to show you the Aussie dollar, because in this case, we can see that the market started out in a certain direction, again away from the weekly open. We had a trend line here. It fell back, bounced off the weekly open, off the trend line, and went right to the weekly mid-high. Then it fell back over and made a progression to the downside, and if you wanted to, you could trade this. Not what we're looking to do here. No trend lines developed yet. And then when this makes a lower high, then we look to trade that away. It almost gets down to this level. Then the market progressed back up. We're out of the trade. It didn't bounce down. It went back up. And this is what I was getting at. Sometimes the market will move back to a previous trend line or create a new trend line. So in this case, as this pushed back to it, it moved up, gave us another lower high. Then when it rolled back over, we could place our trend line now, because now we have a new lower high. And then it rolled down, and notice when it rolled down, came down to that trend line, settled for a little bit, and then pushed on down to that weekly low, came back up, tested, closed below it, then pushed all the way down to that second extension low target for the week, and now we've had this progression back up to trend line, to trend line, to trend line where we sit right now. In this case, it appears that if this trend line gives, we're going to be back at the weekly open. I'm going to be looking for another lower high off of this level and then a possible bounce to finish off the week. So this is, again, a way to trade the market fairly simply, is to, again, look for the market to make a trend away from the weekly open. So we're trading away from the weekly open, looking for a bounce off that trend line to the next weekly range. Now, to get the Average Daily Range Pro Calculator, go to www.compassfx.com/ADR and you can learn more about that. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.